You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Wednesday, May the 10th, and we've got a great show for you today. Stick with us live. Here's what we got coming up. We're talking about Disney stock being down. We're going to take a look at Baidu, which is the Google of China. We missed two huge stocks in EA and NVIDIA. NVIDIA is particularly embarrassing, so we're going to review those. Each of those topics is going to get a recap video if you're watching a recap video, so you can look for those other ones. They'll be posted on YouTube today. We have been doing stories all this week. We looked at Tencent and Alibaba, who are the Facebook and Amazon of China. And today, we are going to look at Baidu, which is the Google of China. Looking into this company, the Tencent was really good pickup. We added that to our speculation list, and we may buy that pretty soon. Alibaba was interesting. Don't think we'll be picking any of it up because of the lack of dividend. Baidu is probably the weaker of the three that we looked at. They are very much the best way to describe them is that they are the Google of China. So let's pull up their investor website that they have going on there, and they are the leading search engine of China. Some of the interesting points. I want to pull up their. There we go. Their earnings. One thing that was very good with them is how they break down their earnings in the report, and the link is going to be in the video description here. Not bad financially. We'll take a look at their statistics here. They're another company with a lot of cash, billions of cash there. But the way that they break it up, bandwidth costs, depreciation costs, operational costs, content, all of that stuff they break out very well in the report, and it's very easy to read. Much more so than the other companies how they break it out. So that was good. It's always hit or miss with different companies when you look at their earnings report and how they track it. Each kind of has their own unique spin on what metrics are important for them. But Baidu was pretty straightforward. Statistically, they don't pay a dividend, which we don't like. They're fairly cheap. Forward earnings 23 times, 40 times trailing. They had a little bit of a decline in their year-over-year earnings, but $15 billion in cash and $10 billion in debt is a pretty good situation to be in. So we like that there. Now, looking at their individual pieces, they are very similar to Google in their image search, their regular search engine. One area they're different is they have the Wikipedia of China going for them as well, which was kind of unique. But all of these things, I'm not a huge fan of Google, even though I should be. Their stock just keeps going up and up and up. So the Chinese equivalent of it, I'm not really excited to invest in. Fairly sound company, and if you want to get into China, they could be an option. I'm probably going to stick to Tencent if I want to get in there. Maybe Alibaba, but I see the video yesterday on my thoughts on Alibaba. But of the three that I looked at, I like Tencent the best. Baidu I feel is the weakest of the three. Let me know what you think. Is this a good way to get into China or not? I'm leaning towards no. Tencent's the way to go. Always interested in your takes and what you think, so let me know in the comments below. That's it for today's show. Thank you very much for watching. Subscribe if you haven't already so that you get the latest investing news for gamers first. We are live Monday through Friday 1:30 Eastern, 12:30 Central. Tweet us at InvestorXP or shoot us an email. It's mail@InvestorXP. But I strongly encourage you to join the discussions on the recap video or chat with us live during the show. We're really trying to build this channel up, so I appreciate all the subscriptions we've been getting lately as we start to build our channel. It's great to see. I want to get this community building. So thank you very much for watching, and we will see you tomorrow.